All righty. Hello, everyone, and welcome to the live stream. It's great to have you here. It is the 3rd of November. Yes, we've started another month. And of course, we are still in earnings season. Today, we'll be talking stocks. We're talking everything commodities, crypto, which is down at the moment, still looking a bit weak. And obviously, some big talking points here. What's going on with the Hindenburg Omen? Do we need to care? And more importantly, what's happening with Brett? What's happening with delinquencies? One of the keen viewers there already bringing up a little bit of interesting discussion about that. And also, what has exactly been going on with the DAX? Because we need to talk about the German market and the Nikkei, which is up 14% in 1 month. It's great to have everyone here so early. Obviously, it is early. I know daylight savings has changed for everyone in the US. Remember, it's pretty late for me. It's about 9:30 at night, but it's obviously very, very early for you guys. So thank you very much for joining us. If you could, we've got Guy, we've got Michael, we've got another Michael, we've got James, Robin, Christine, Sir Toast, Giga Bear, Chad, Silverson, JT Fars, and everyone else. Morning, everyone. All right, just a quick reminder, we do have a free VIP newsletter. We're putting them out every week into the end of the year, of course, and you can sign up in the pinned comment below. I just actually put out this week's one, which does have, of course, a couple of extra little sneaky charts in it. We will be talking about one of them anyway, though, in today's video. But if you want to get exclusive charts, obviously ones that we're putting just in the newsletter, make sure to sign up for that. It's completely free. Also helps support us as well. All right, let's talk about this one, the Nikkei, guys. Whoa, Nikkei is up big time, 14% in a month. Let's just quickly have a look at the low to the high. Actually 18.63%. That's an incredible amount. So obviously nothing other than parabolic is the way you'd look at this market. And it does have a history of doing this. You might say, well, is this rare? Not really. It's done it back in 2020 into 2021. And the reason I bring this up is because it tends to do it when you've got a lot of hypergrowth going for whatever reason. So we actually go back over and we have a look at the past history, you can kind of get a bit of an idea of how big it is. Now, if we do go with JPN 225 here for a second, and maybe we get older one. Let's have a look here. Get an older feed. If we get one off here. Because what we actually want to see, if it does load, it probably won't. No, of course it won't. That's okay. Is when you actually look at the back history, what you really get an idea of is how far and how crazy it went in the past. So I would always encourage people, we won't do it right now because it'll be one of the other codes. Go back and have a look at the 1990s on this market. Have a look at how it went. And then, of course, recognize that things can go very parabolic. Now, I've got a bit of a rule, and that is that when you see an outlier candle like that, that's just so ballistic compared to any other candle that we've seen in a very long time, that you ride the trend, but you get ready for what we just saw with gold. So basically, this will get volatile at some point, but you have to ride the trend because these trends tend to absolutely blow everybody's face off. And I would say a lot of people are going to be talking about this over the next coming weeks. Now, it's not so much that I like to trade this market. I don't. But I think you cannot look at a 20% plus 20% market and not be saying, well, wait a second, what exactly is going on? Is this like a risk off across the board? Is this unusual? Is it weird? How much has it gone up in just a few months? Well, the answer is 72.45%. So this is certainly a very, very interesting point here. Now, why did I mention we need to be paying attention to it? Well, you'll notice some of the other blow-off periods, but particularly over here in 21, we got that kind of massive ramp where it came alive. During most of my trading career, which started over here, this has been a terrible market to be in. Of course, more recently, it's been very good. And obviously, I know this is driven by all sorts of policy, of course, but when you're over in this area here, this actually happened when we were in that February 21, which actually marked, of course, the key hyperstock phase. Now, that's just a link at the moment, but I did think that you have to be looking at this chart and paying attention. Meanwhile, there's another chart that I'd be looking at. I may do a special about it in next week's newsletter, so make sure to stay tuned for that. Take a look at this monthly first up. This is the German DAX market. We'll get into the S&P and get into some more in the future. The German DAX market is long leg doji, long leg doji, long leg doji, bit of a bullish hammer, bit of a shooting star. What is that? It's the long leg doji over 2 months. So effectively, this is one of those markets that realistically is completely range bound, and it's also at equilibrium. Now, it becomes more important when you start looking at the daily and the weekly. You have a potential here, BC. You have, of course, a UT, and then you have a potential UTAD. And you may say, well, why do I care? Because this actually did happen before. It happened a few years ago. If anyone's been watching for long enough, you would know that we actually used the DAX to correctly figure out that the market was probably going to go into a bit of a fall, a little bit of a waterfall kind of moment. And that was back over in this period over here. Man, it seems like an eon ago, but it wasn't that long ago, I guess. And that was back in February kind of period here of 2022, where we already saw a fall, obviously, during the 15th of January. And we rallied in the markets, and then we dumped through. And this actually was a Wyckoff back then. So it was a really cool distribution, sold off, ended up recovering, gave us a good buy. The DAX actually became one of those good leads. So something to watch at the moment. Bullish trend. The trend is bullish. You don't want to be negative on it, but you do watch. Okay, just watch. You pay attention. You have it there. You set an alert. I just put an alert there so you guys can see, and certainly something I am watching, because you got to pay attention to these things. Other things to pay attention to. We've got here, of course, percentage of stocks above the 200-day moving average. That's been weak for a while. It's been actually stagnating as markets have been rallying. So I'm just going to put that's a terrible line, guys. Let's put a better line through here for a second. Someone with OCD is not going to like that. So let's just kind of put this here. And what you'll notice is the market has been going up, and it's been doing so not really with more stocks rising that much. It's like a barely there breadth. And it's not so much that I'm concerned about breadth, but obviously there has been a breadth style trigger. Does anyone know what trigger that could be? Hey, AAB, what's up, man? Next video, please, says that's crazy. Absolutely. Thatcher invented ice cream that does not melt. Isn't that Dippin' Dots? Isn't Dippin' Dots space ice cream? Has anyone had Dippin' Dots? I think that was a thing that came to Australia once. I think it's an American business, isn't it? You didn't make my OCD happier with the way you did that. I know, but I knew I wouldn't have, but it was still funny, especially this bit down here. This would be really getting you. Anyway, that's all right. So basically, the Hindenburg omen obviously is the read there that is kind of coming with it. Obviously, a weakness in breadth. So why have I signaled this? I just think it's something to pay attention to. Usually during early cycles, this is actually what you see. So you have big tech going first, gamma, that kind of stuff. Then what happens is you get the rest of the market going through. And that's why a lot of people say it's early cycle. I think it's still late cycle. I think we're in the last, phases because of something I actually just wrote in this week's newsletter, which has just gone out. So that's good to do with earnings, because earnings is good right now. Of course, it's fantastic. You don't want to go against that. That would be bad. But it's an interesting point here because, again, percentage of stocks, it's rising up. We've also got a bit of a trend line here. So you'll want to see, of course, percentage of stocks continue to improve. If that doesn't happen and this starts pointing down, not good. That's going to be an acceleration of the concentrated market, being tech, and a deceleration of the rest of the market. And if we get that deceleration, what is that reminiscent of? It's reminiscent of the 1990s, which is pretty much what most people harken back to at the moment. I actually think this seems more like the railroad to me. So this AI kind of concept that we've got right now, it has all of the same properties of actually what happened during rail. I should talk about in my advanced course, but it's a very, very interesting point. So point 2 here is that, yes, percentage of stocks are a little bit less, though we remain bullish because earnings is up, earnings is doing well, trend is up, and ultimately price action is number one. So remember, with macro, you can find a lot of good things, a lot of bad things. We look at both. I'm just showing you some of the things right now. And the last one is, of course, the Hindenburg Open. So you can see here we've got kind of a few reads here on the Hindenburg. And again, it's happened a few times. It's actually probably a false read based on this. I just wanted to give you a visual. But the main important thing is clusters. So you want lots of them. Okay. And if there's lots of them, they're usually early and they usually cluster a lot and it can take quite a lot of time. So again, it's kind of like one of those canary in the coal mine situations. The canary says, well, the canary wasn't faring very well. There's a weakness underneath, but it doesn't trigger a sell. In fact, markets usually lead higher. In fact, I think they most of the time lead higher. So even if they get a short-term decline, generally they lead higher. And that's why, of course, we remain bullish into next year at this phase. I just don't see how earnings can bring a bear at this point. It doesn't tend to happen. And again, there's a little bit more of that in our newsletter, which we brought through. We don't have the top of tokenization, I don't think, yet. We don't have the top of things like the Texas Stock Exchange, which I make a big deal about because I think deregulation is a big story. And we just we still have so many people calling bubble. And what do I say, guys, about bubble? Yike says, whoa, you do live? Crazy. I guess I'm not up late enough. Well, we do, of course, a private community where I do lives every day, man. But we do a Monday live session for everyone for free, where we go through a bit of macro. We go through some of the lead things that we're seeing right now. And then, of course, we cover off on some stocks as well. They didn't replace every railroad track laid every 4 years, though, like the GPUs needed for AI. Well, that might be partially true. But at the same time, that's a funny one there, the CapEx spend kind of data center thing. But I think actually you'll find that a lot of these GPUs are starting to get up there where the iterations are probably starting to weaken. Maybe someone that's more tech knowledge friendly will be able to tell me how much better it is getting each cycle. Because generally speaking, you hit a point and then you go back to that law of semiconductors concept. Doesn't look like Tom's new computer arrived in time. Do we not have right audio? What do you mean? We should have perfect audio, dude. Oh, you mean this? Wait, I'll just turn this thing off. You probably got like a really loud fan in the background. One sec. We'll get rid of that. Better, guys? That should be a lot better. Doesn't look like it came through. Should be beautiful. We got gigabit. We got the most powerful stuff, but we don't have cam. So I need the cam set up. So we'll get that. Yeah, it should be absolutely good. My coffee is tasting flat. That's all right. We'll get that bubbled up for you. We'll get it frothy like a cappuccino for you. So, all right, let's go through the next point. So, of course, on to before, generally speaking, when everyone mentions bubble, the market doesn't tend to pop. So just remember, we saw August probably in Google Trends showing us the peaking of that. Now we go to the next point in the market, which is obviously the everyone just wants to pop in. They all think they can get out first. It's all good. And we'll be looking. All right, let's go through the weakness and the goodness today. So the first up, hate how it does that. Let's take a look here at Bitcoin. So certainly weak on the small time frame charts. Actually, one thing interesting is we're coming up to pressuring, and I don't think we're going to hold it. What do you guys think in the chat? What do you guys think? I don't think we're going to hold this one because you'll notice here, Bitcoin has come back to the anchored VWAP again. Now, every time it's held up, it's found little buyers. Oh, come on. Little higher lows each time so far. But we're pressing it again. We failed to even miserably go against this point here, which is about that 111.5 area. Not very good. And it looks like the market is really pushing this idea that it may wipe the lows. Now, I don't know it's going to. Of course, I remain bullish overall on Bitcoin due to tokenization, due to all these other things. But I do think that a nice little wipey, considering everybody knows the halving cycle, would be in order. And what I'm kind of thinking at this point is we take out this low of 98, which has been my long thesis here. And I want to see something go on here in this 94, 96. Now, there are other people that are drawing all sorts of things. I've seen head and shoulders here. I've seen people claiming head and shoulders here. I've seen people, of course, claiming Wyckoff, which is very valid up the top here. So obviously Wyckoff through this point. I've seen all sorts of things. So there is both a very strong bear case data-wise, and a very decent bull case when you start to think about who makes the most amount of money if certain things occur. All right. So what I kind of feel like now though is that this anchored VWAP ain't going to hold because it's pressuring so many times. Pressure, pressure, pressure. This is not a strong bounce. So very important level here. Personally, not selling it or shorting it, but I could see a case if you were short here, you'd be pretty happy about the way it's coming down to this point. So that's a big thing here. Jeremy says, do you think the Nikkei can continue up for another 10 to 20% in the coming weeks? Man, that's an insane statement. You know what I mean? But hey, here's the thing about those markets when they go like 14 to 18% in a month. Generally speaking, until everyone's on board the gravy train, it doesn't pop out. I would never short a market like that. There's no evidence to say it's done yet. But 10 to 20% in a few weeks, like that statement's madness, if you know what I'm saying. It's an entire stock index, but certainly possible. The one thing about Asian markets, have a look at the Shanghai Composite and check out that one back in 2015, 16. You'll see when they go, everyone jumps in. There's nothing like an Asian stock market. They are absolutely wild in the leverage. They get in and they lever up. Oh, they lever up. The US one takes years of slow burn. The ones in Asia sometimes go for about a year and then they're done. And boy, oh boy, do they explode when they go bad, because you usually hear stories of 1,000 times earnings, weird stocks where everyone's jumping on board. No one cares. Everyone's just jumping on board. So it'll be a very interesting circumstance there. So Bitcoin, certainly a few of you believe the anchored VWAP won't hold. I went through pretty much all of the main things. The ones that you want to be watching, of course, you want to watch your weekly 50, which just so happens to be around just 100. Now, it could still dip underneath. So remember, we get the 50, and then we dip into this level, which would be sweet, and then we bounce. This is the most important moving average. It's the Scottie Pippen moving average, guys, the 50. I'm going to give Scottie Pippen TA. It's not bad. You've done all right, Scottie. I reckon it's pretty good because the 50 actually is the most logical moving average to hit. It's also logical to wipe it a little bit and then hopefully wick above. And that's why I'm kind of putting together those pieces at this point. But I'm not sure what the sentiment is. I'm going to get you guys to give me the sentiment. Let me do a poll here. And I want to know, what are you seeing out there? What is the ground level here? Are people bullish or bearish crypto right now? Okay. Bull, bear. Okay, let's have a look. What's the general concepts out there that you're seeing? Are people saying crypto crash, Bitcoin going to zero, or are they all just floating around saying it's all going to hit the moon and the moon's coming next week? You know what I'm saying? It's a good barometer. What you guys see is very powerful, especially on mass, which is awesome. We've got 700 people joining us here very early in the morning. Appreciate it to all the US and viewers, and also anyone from Canada. The UK, you guys probably could view because that area of Europe's not too bad, but certainly unbelievably early for you guys. So I do appreciate it. Well, you can tell we've got high achievers because you guys are getting up so early. Bear till 98K. Is that what most people are saying? BTC is the mafia. Construction built to hide. Interesting. Sweep out the large wick to clear all leverage longs, then sentiment back. Now, is that your opinion, or is that the opinion that we've had for a little while here? What is sleep, says Raider? Oh, you're a real market. You might be a crypto bro. Everyone printing money. Why would it be over? Why would Bitcoin ever go to zero? It's not going to zero. It will not go to zero. The idea that it will go to zero is just not going to happen. Have a look at some of the other markets. It has too many. It's been around for decades. A decade and a bit. Not 2 decades, obviously. But the point here is with Bitcoin is it's ingrained. It's part of the financial asset network now, and it has hodler whales. And that's actually why I loved Bitcoin in the end. I became a Bitcoin maxi because I actually really like the dynamic of the whale. the whale doesn't sell. The whale is half the time lost what they can get access to. It's very important that you have around 70 to 80% of an asset held, and they hodl, and they just hodl and hodl and hodl. And every crash, that's exactly what's happened. Only about 20% of the overall Bitcoin ever transacts, which is very important to a stability of an asset class. And I think that can convince a lot of people. It doesn't matter. That's the type of thing you see in blue chip stocks as well. Ethereum also weakening down to these lows, so certainly crunch time for these markets. All right, let's jump on over to US 500. It's still going up. There are no real reasons to say anything is bad. We've done some analysis. We found that the daily 20 was interesting, which is just above 67.50, which just also happens to be the put wall. Obviously, there's a ton of puts today sitting around this level here. So that helps to support the bull case. As you can see, 68.20, tons of puts, 6,800 tons of puts. So very difficult for a market to get under that unless it really wants to nail a few people down. So it still looks pretty good. And there are no other real reasons. I mean, people say RSI and they send me that one all the time. I don't think that's enough. People send me stuff to do with all these different indicators like MACD and divergence and this. It's not enough. You know, people say sometimes we have, really basic PA. Actually, I just don't need to see a lot of these indicators because I know the edge is not going to be great enough. Remember, one of the big rules is if you can put the indicator into a robot very easily, it's probably not going to work anymore. I mean, what we do is we position based on a confluence of techniques. It's very difficult to put into a robot, incredibly difficult, even with AI, because AI would have to have a neural net. So it's going to be very difficult to set some of the things because it is position-based investing, position-based trading, and actually based on really watching and looking at what retail traders are probably doing wrong. And more importantly, the big hedge funds are doing wrong. And then, of course, going against that. It's actually contrarian thought, but not for just the sake of being contrarian. Contrarian thought when all the signals are going contrarian and everybody is the opposite direction. They're the best trades. When it feels bad, it's usually pretty good. But at the moment, the markets feel kind of nasty for a while now. So they've been pretty good. That wall of worry that we end up climbing. NASDAQ up a little bit. Again, market just kind of sideways in here a little bit. We still do expect bullishness into the end of the year. We've covered that in most of our videos. And even if we get a decline, it does seem to be minimal at this point based on the markets. Chinese market, a bit of recovery here, guys. Gold and silver, bit of recovery. We got back to 4,000, which just so happens to be the daily 20, but tested from the bottom up. In terms of where I think it could go, I still think 38.50 is pretty key. I don't expect extreme, new highs anytime soon. I think it's going to be weeks and maybe months into before we get that, but chilling around, that's okay. And silver, of course, hit that daily 50. And again, this one actually is also dealing with the resistance here at 49. The US dollar has been pretty good. Nice work. You know why I clap? Because most people were hating the dollar. Remember when they all hated the dollar, guys? When all of you hated the dollar, you said dollar's dead. Other currencies might be dead before the dollar, but it is very unlikely the supreme US dollar is going down anytime soon. And I know everyone has their bias and opinion on things, but you've got to remember there are weaker currencies out there that need to be hit up first. So it's not going to be the dollar first. What this is telling us is that money is potentially starting to see risks in certain areas. And we've seen, of course, a lot of movement going around. But more importantly, it just became an overly shorted position. And this actually had a really awesome trade on it last week. In my opinion, this was pretty strong Wednesday, and it's been bull, bull, bull since then. That's good. Don't say that about gold and silver. I want it to go ballistic. No, you don't. It'll just crash. You don't want the gold and silver to go ballistic. It already went ballistic. I don't know why. Sometimes everyone gets greedy. You guys greedy? You greedy in the chat? First dollar area just got hit. Second dollar area is now sitting at about 101.60. Okay. So pretty nice on the dollar. Still looks bullish. At this point, it's hit the first target, so not too bad. US oil. Interesting. Still no break of 63 a barrel. but certainly an improvement. And that is, of course, leading into now, I think it's the third or fourth sector, best performing sector of the last month of rotation, oil services. I bet you no one else that doesn't. If you wrote a YouTube video and it said oil services looks great right now, or oil services, the new hottest sector, oil services, you'd get about 4 views. But that's the beautiful thing about what we do, because we talk about everything. Sometimes I get to flick in some random crap. And this is certainly one of them, because it is very random. There's not many times in my life that I've thought, oh, I like oil services. But yeah, they've been all right technically. And I think that's just another great technical. It's something actually we covered in our private community, which of course you can join over at fxevolution.com if you're interested. But yeah, it's been pretty good. Another one that's been doing all right recently has actually been iron ore. So again, the metals play that we've had all year has been starting to catch up, which has been pretty sweet. Let's jump on over to some single stocks for a moment here. We'll go to Palantir, which is what everyone's going to be talking about today. Up another $4 into earnings day, and it is getting pretty feisty. Not a bad entry here. I actually think that's pretty strong with stop below the low. If you got that, you're already up at 1-to-1. Momentum is in the favor of Palantir into earnings. Earnings is people always want to say, what do you think about earnings? Well, you go back over the history and you say, okay, well, does Palantir generally live up to expectations? Well, since especially around the election last year, it's all green, baby. So it has been green, 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 probably. Now, the next question you have to say is how much of that's packed into price? And that's a question you probably can't answer. So you just go with it's trending up. It's obviously running into it. Could be a buy the rumor, sell the fact. So you look at how it's reacted last time, rallied, then dumped. Over here, dumped, even though good earnings. Over here, rallied, then dumped. Interesting. This one's a rally. So actually sold into the earnings, then it rallied afterwards. And then that's pretty much all we've had so far. So seems to be a rally, then maybe rally further, then dump. So if you're going to get the price, if you're scared about getting the price again, I'm not sure I'd be worried based on that anyway. Let's have a look here at the Mag 7, or all the stocks that everyone's focused on all the time. Apple, still bullish, no change. Amazon was pretty sweet. If you picked this up before earnings, it actually had a technical setup. I really enjoyed the downward trend line break, obviously the higher high. To me, this was looking bullish into the earnings. You would have got lucky. Anyone do that? You would have got lucky, but this is certainly done very nicely. Google, one of our favorites fundamentally at the moment. We like that. Microsoft. Oh, yeah, that's that stock. NVDA, pretty sweet, 205. Very nice technicals here. Again, doesn't matter what your opinion is, even if you think it's rip-off. It is back to 45 times forwards. So that basically means it is fair market value right now. Is it expensive? No. Is it cheap? No. So it is fair market value. So this is actually a little bit earlier. I thought that to get the valuation, we might have been at 245, I think I said. But it looks like we hit it a bit earlier than I thought for some reason. So anyway, at 205, it's done well. It's still in an upward trend. And as I always mention, when you're tracking this market right now, if semiconductors are going long, guys, you generally want to be bullish. And the only thing I can think of in semiconductors, and I'll bring this into the close video today after Monday's close, is that we have around the same length. So in essence, we have a flag style pattern forming, glorious length here, similar length happened. If you take all the way down to the short, you get at about 80%. So you're starting to get in the toppy end of what has been an incredible pattern, which is obviously something we looked at because last time we saw rotation switch, we picked that up in July, then it rotated, then we picked up the break in September, and since then it's been risk on. Why'd I yawn at Microsoft? Because it used to be my favorite stock, and then it became really expensive. And the moat's great on it, but I yawn because it's so boring. It's a paint drying stock at this point. I can't even wrap my mind around valuations. They're not insane. We've seen more insane markets. Nikkei, 1990s, 1980s late. Uh, Chinese market back in 15. We've seen some pretty nutty valuations there. So things get pretty high. Things get pretty high. Now, another one that's coming in a lot is a request for doing meta because people think that should be a buy the dip. Hey, Tom, I need to buy the dip. I need to BTFD, man. Is that a good idea? Is this a demand? Sure. But guys, should you buy the dip or should you buy the rip? Remember, person that buys over here generally is not a good long-term investor or trader. Person over here generally is a much better investor and trader because they have the patience to wait. Now, if you're dollar cost averager, well, doesn't matter. But if you're somebody that actually is trying to trade with stop losses, all that type of thing, then of course you do want to see a reaction. So it's too early. Wait for confirmation. Yeah, pretty much. So certainly is a weak looking chart. You can definitely make a case for this being a head and shoulders with like a double head, ogre of some kind. And it certainly hasn't completed. To complete, it would need to go back in the 500s. So get the gap maybe here. So certainly, I think it's limbo land for that one. And again, shows you the fragility of one bad earnings result, even though it wasn't shocking. It was just a slight miss. Yeah, bang, down we go. I didn't think it was horrible. But anyway, the market doesn't care. So doing whatever it's doing, that's fine. We're not needing to interpret that. So we've got US oil coming up to an important level. We've got Tesla, 457. This continues to look pretty good on the charts. I couldn't really say it looks bad. I don't think it looks bad at all. The weekly was a very nice close. I really think it's just bullish. And I think Elon's going to sell crap out of this robot concept. I can see it now. Has anyone seen that robot they released last week? I'll show you guys a picture. 1 second there. Yeah. 1 second. This thing. The robot. I don't want to get done by all these you kind of whatevers. You see it here, yeah. So this thing here, this neo humanoid robot just stunned the AI industry, and maybe you can watch this stuff. But anyway, everyone's next year is going to be the year of we've got AI's done this, AI's done that. People are going to be smoke screening some serious stuff. I'm not sure Tesla is. I don't know, but I think there's going to be some serious smoke screens. It's not there. It cannot be there. If it's there, I'll eat my hat, mate. But I don't think it's there, guys. If history has anything to go off, it's unlikely there based on what I'm seeing. Now, will it do a rap dance for you? Probably. The remote controlled Neo, awesome. Not, yeah. Wasn't it meant to feed me? Not all AI chips stops can win. Oh, yeah. There's going to be winners and losers for sure out of all of this. That's why MIT came out and they said 95% of AI projects are going to fail and give no noticeable benefit. It's not that it isn't the future. It is. It's the future. Okay. The future is some version of AI. The question is, do we have to go through a normalized cycle of a boom and a bust and then a super boom? And I think the exciting component is the innovation that we're going to be able to invest into the future. All right, let's have a look through some of the stocks we had actually in our community setups last week. There are a couple of interesting ones. Obviously, we'll share a couple with you guys. This comes from our private community. One of them here is Glencore, which is actually a stock in London Stock Exchange, but you can see here a nice little flag set up. So just again showing there's a lot of single stocks kind of going out there. And this one still remains bullish, pulled back a little bit, but still very, very nice and actually triggered before the massive bounce. So that was pretty sweet. And then, of course, we had another one, an interesting one outside of the American market, though it is on the NASDAQ, which is Bilibili, which is the YouTube kind of in China stock. And this one here is really nice upward trend and continuing to pressure the 240. So that'll be a very interesting weekly close coming up with that. We've also seen Coin, which came out with, of course, something we've talked about here, which came out with some earnings. And this could still benefit from, I think, other things in crypto space, the tokenization, all the other stuff that's coming. So at the moment, you've got to kind of just go with, did it break up? Yes, a little bit. Pulled back and consolidating? Absolutely. Is it around support? Yes. And the real possibility of a further weakness, crash in the markets, let's say with Bitcoin, is going to be this structure down here in the 240s. So that's going to be a very interesting point as well. So that's one there. And then, of course, there's plenty of others. Another one that was pretty sweet coming in, most of you wouldn't have even looked at it, was Regeneron. And Regeneron had actually a really good little buy in here. And then, of course, a secondary buy as it gapped up to the 210 kind of space. So again, it just shows there are plenty of different opportunities out there. Got a couple of super chats coming in. We've got one from Zen Bulldozer, $10 Australian. Thank you very much. Hey, Tom, what do you think about Rio Tinto on the charts? Well, actually, I've been pretty bullish on iron ore. I went on one of the Australian TV stations and been talking about this for a little bit. And I've liked it because it's solid technicals. We got a breakout a little while ago. So again, plenty of opportunities, abundance mindset, guys. It actually broke out in October. It's coming up now to a very key resistance, which is going to be break even for a lot of entries, take profit for some, descale for some. This is a major high for this stock. So for anyone in America, you actually can access Rio. It's an Australian stock, but it's in the New York Stock Exchange. You can also access Vale, which has been doing pretty well recently. And it's not that I love iron ore, it's just that it was underappreciated. But notice this is a multi-year level. So I'd expect to consolidate and hopefully break through. But my general opinion is pretty good on these. And we've got Secret Revenue becoming a new member. Thank you very much for the support here on the channel. Just remember, guys, though, I really appreciate it. But if you do want to become a member of the private community stuff, please do it over at fxevolution.com. The YouTube memberships are more just like saying, cheers, man, for the content. Appreciate it. And I do appreciate you very much. So thank you, Secret Revenue. Also, he's got a cool picture of a little dragon thing there, like a water snake. A lucky water snake. Are you holding gold or gold miners? Both were pretty good, in my opinion. Gold miners were underpriced to gold. They've since caught up, as you can see. That's 147% when they were significantly underpriced. So again, it was something I talked about last year. As you can kind of get a bit of an idea that I liked gold miners, but now I think they're okayly priced, if you know what I'm saying. TQQQ box 11669 to 119. If you're trading the TQQQs, I'd suggest you do your analysis on the NASDAQ and then go back over like non-levered, because the levered one will give you poor price action. You know what I'm saying? You still trade it if you wish, but that would be my suggestion. So generally, guys, this week, what have we got? We've got earnings. Let's just quickly jump a couple of earnings. I'll just switch screens. Got it over here somewhere. All right. So we have a couple of things. We've got Palantir today, Shop, AMD plus minus 9, McDonald's, Qualcomm, Airbnb, Novo. The general gist here is that we have support of basically markets, generally speaking. So that's 80% plus of earnings are beating. That's a good sign. You just cannot be bearish on that kind of market. You can get pullbacks, but you just can't be bearish because earnings generally lead into further hype and anticipation for next earnings. So really the only thing that can come out against that is going to be some government policy, maybe tariffs or inflation kicking in. I heard underlying inflation, which I might put in the end of today's video, has been spiking up, kind of like the hidden core inflation underneath that we're not really quite seeing in the data. And also remember, we don't even have the data. This week should be non-farm payrolls. We should be getting unemployment figures. When we get dumped all of this stuff, is it going to show us some hideous revisions that are actually symbolic of a full meltdown underneath? the only thing we can go off right now is that when tech earnings, even though concentrated, are pushing, what it is doing right now is we've got acceleration of tech earnings and we've got deceleration of certain other ones. So effectively, these are slowing a little bit or just kind of doing this, and tech is just carrying. But when you have like 46% of the S&P as tech, it can pull it along. And that's what happens when you get really concentrated. It's all that circular worm thing right now, guys, where you've got your NVDA feeds this company that feeds this company that feeds this company. And I just saw that, what was it? OpenAI is going to go on the market. And I think by the time OpenAI gets on the market, I don't think it's going to have the same valuation, frankly. I think it's going to be worse. Could you check Docu out? All right, we'll do a couple here. So we'll do Docu, have a look at DocuSign. It's been a little while. Not a bad little base here. So you can see clearly that it's been sitting for a long time. It came down kind of around the 63s. You got this big rejection, big pull up. Then we have here a series of kind of sitting at this zone areas. I don't know why I went black there. There we go. So we've got kind of sitting at this support. We've taken a slightly lower low. I have looked at this in our private community before. I like the last week's weekly. So I think last week's weekly was encouraging. And this is a very encouraging level. I'll set an alert above here. And I guess if it gets above 74, it could trigger a buy. It's risky because it hasn't got strong momentum behind it like a Palantir. IREN went up just 18% just now. Thanks for what you do. IREN. Very sweet. Where'd it go? 23%, actually. Very strong. So that's pretty sweet. Yeah, so it actually changed trend last week and then pulled back a little bit. And if you were holding long, which there was no real reason to be terrified yet. Actually, what is this percentage? How much did this drop? Well, it dropped quite a lot. Yeah, you could have been terrified, actually. But earnings got it through, so very sweet. That's a big run. No, AI will turn on the oligarchs and become the real masters. I don't think it's there yet. I think that at the moment, this AI that, well, at least what we can see, and I think even what's behind closed doors, I think we're getting slower. And I don't know what you guys think in the chat. We've got almost 1,000 people here, but I'm pretty sure you're going to agree with me. Is the quality of the chatbot getting worse? Is ChatGPT getting worse, guys? Well, actually, Gemini is pretty decent, I think, for the general stuff. But I think it's getting worse. Getting better in certain things, but worse in the quality. It's wrong more. I'm telling you, it's wrong more. It's super wrong. It's like it's been fed by people that are incorrect, and then the people have incorrectly fed it. Then it's, the quality of the data is going bad. So at the moment, it's all good. But like any new tech, it's going to have a massive issue at some point, because they always do. They hit a bottleneck. Last time in the tech industry, when we had the internet, what happened was everyone was like, yeah. Oh, wait, no, what? Not everyone has the internet. Not everyone has adopted it. Not everybody is actually that the hardware is not there yet. Like, think about back in the 1990s. You had a pets.com. We can fast forward that to right now. We have a remote controlled robot that dances. You see what I mean? But don't worry, because we're worth hundreds of billions of dollars if we have remote controlled robots that dance. You get what I'm getting at. Back then, you have a streaming website that just streams live video. That's $1 billion. Now, it's a chatbot's AI plugin. Can you give your opinion on Pepsi? Yeah, I like Pepsi. It's one that's actually in our watch list already. So we had a good trade on Pepsi just a little while ago, long, which was actually brought up by a member. And then the problem with Pepsi is it's got this beautiful looking inverse head and shoulders. and it certainly has not broken. So I've just got an alert sitting for it up here. At the moment, nothing. Took it off until that alert hits. Google just introduced a new training model which might improve all of this. I'm sure there's going to be lots of things. Absolutely. Don't get me wrong. I'm loving Google. Google, Google, Google. What about Chipotle? Good one. Chip. I found a couple of American Mexican cooks or something online. I tell you what, it's been damn good. Amazing. I like Mexican food in America. It's been amazing. I'm sure Mexican food in Mexico is even better. But I've never been there. What is going on here? Oh, sorry. What happens with the fads? I must admit, when I was in America a little while ago, I didn't really get this one. I did not understand it. I went to Chipotle. I then walked like 5 minutes down the road to a random, like, I don't know, family owned Mexican business. I can tell you what, that 5 minutes, best ever. Okay. Chipotle, meh. Sorry, guys. This is meh. Best ever. So, what's happened? Well, it copped it. Now, has it hit the major demand? I think in here is very interesting. So when you're looking at dollar cost average kind of levels for some people, you're going to like it down here. You can see it's just tapped into that really heavy trade zone that we saw at about $30 psychological level. But would I buy it? No, because it hasn't found a base. So you can sit in these for ages. Electric grids are going to crack. Will show up this winter. That's an interesting point, actually. Is that going to happen in the US? Because some areas, I'm sure your electricity and gas or whatever is electricity in particular is going up big time. Yeah. So are the grids under a lot of pressure in America? I don't know. I know there's a lot of data centers going into India as well. I've heard. America obviously has tons of them in certain areas. Going to get expensive out there. The chimichurri crashed the Chipotle. Hey, from Buffalo, multi-year listener. Appreciate it very much. Thank you for what you do. I talked to my 18-year-old daughter about why she stopped going to Chipotle, and she said it was because the portion size was downsized. That's true. The best ever one was 3 times larger. Too big. It was too big, but it was cheaper. It was the same price. 3 times larger. That's true. That was very small in American size. They were trying to screw the consumer. Thank you for your support. Appreciate it. Hey, Tom, what do you think of Grab? Not my favorite moat business, but the price action is doing very nicely. So you have really strong breakout here. I like these types of consolidations. Obviously, then you breach, you come back down, you find a bit of potential pressure here, and then you start buying up again, ideally. So I actually quite like it from that aspect. If we go daily, you can kind of see it's clearly got a little bit higher here at 620. So I'd like to see it hold above 538. It's okay. It's a decent chart. Looked at it a few times. Will rare earths be the next big stock trend? Rare earths have already gone massively well, JL. Like, we've been following rare earths all year, and I mean, they've been stonking. Now, could they do better? Yeah, of course. They could get back to where they were and more. So I think we are in a decade, maybe 20 years worth of people realizing, oh, whoops, we forgot to secure the rare earths and the minerals. And the media has obviously picked it up recently, which is why you're getting these exceptional trends. But I think the general trend is we're in a in a grab. It's like watching those sci-fi films where they've got everyone, mining some random planet in the middle of nowhere as a penal colony because we need the metals and the minerals and stuff. That's kind of how I see Australia and the rest of the world is everybody's going to be like, oh crap, we need to secure the precious metals. I mean, the charts that I've shared recently are pretty terrifying when you really look at them. Lots of US homes use gas to heat their homes in the winter. Okay, cool. Can you do Oracle? Oracle is just a bit of a beast, but it fell. And the problem with this is it rallied so much. I mean, it hit the news headlines big time. And what was the news headline? Larry Ellison or whatever his name is. He made so much money in a day. It was like the most ever, 100-something billion dollars. I mean, that's nuts, yeah. In one day, one bro made 100-something billion dollars. But at the moment, it still declines at this point. You've just hit the kind of resistance support. You haven't gap filled. It's kind of around okay, but until it gets back above 287, I wouldn't do much with it. Like one of those cases of patience, reaction is best. Guys, generally speaking, the big thing here at the moment is that the markets still remain in a very good beat rate for earnings. We do have earnings this week. Palantir will be in focus today at the end of the day. I'll do a special on that today's close. Bitcoin's still the most interesting chart. Dollar is strong at the moment, obviously hitting resistance. Gold, silver seem to have stabilized around this level, which is kind of nice. Tesla is in positive gamma at this point. NVIDIA has kind of hit fair value, although still looks relatively bullish. Semiconductors are up, so we remain bullish across the board in terms of any pullbacks at this point with the available evidence we have. Are there macro signs of weakness? Yes. Do we care? No. It's like usual. We haven't been caring for a while. And generally, we are more on the bullish side. And you might say, is that naive? Look, we know about commercials. We know a lot about the reverse repo markets last week. 50 bill, of course, the old sneaky. But the thing is, does it give you edge? There are problems in the banking system. You can go look at the European ECB interview last week. You can go have a quick watch of that if you want, and you'll see that they're like asking them, they're drilling them about the banks, and then they're like, oh yeah, the regional banks are pretty good. Yeah, right. So clearly there's something there. We just don't know exactly what it is. And I noticed Powell also reconfirmed that the regional banks were fantastic. So, when else that happened? When we got Bernanke saying, "Oh, the banks are looking fantastic," back in 2007. So we just pay attention. We keep looking for signs. We look for Hindenburg. You need cluster on cluster on cluster. It's really early. But by the time it even pays, it's going to be out of people's minds. Kind of like people are already forgotten about the first rate cut only a month and a bit ago. We haven't. Structure is all important. What do you think I'm tracking? Are smalls and mids beating the big ones? If they are, it is a concern, a very serious canary concern. For now, just chill. So keep being optimistic, guys. Keep coming from the abundance mindset. It does pay out. Be in a healthy level of skepticism, though, because this world, there's plenty of information that you need to be thinking about it to really protect yourself. I think this market pays to have humility right now. And what I'm seeing a lot of is optimism, is FOMO, and very little humility. And to me, that is the most important lesson I learned. Remember, temperament is my number one thing. And if anyone said, what's the most important thing for a trader investor? One word: temperament. That's it. It's temperament. 60% of Bitcoin YouTubers and X's and TikToks and stuff, according to you guys, are currently bearish. So there you go. And that's interesting because usually it's pretty strong bull. So again, if you want to get that more to a 70, 80% bearish kind of read, you're going to need to pull it under 100. And then if you jackknife it straight back up, then it's going to leave a lot of people very bloody. I think the crypto market is the one to watch. Keep watching it, guys. Keep optimistic. Plenty of ops. Thank you so much for watching. Thank you also for the 1,000+ people that got up here early in the morning. And remember, in the pinned comment, sign up to the newsletter. It's completely free to do so. Yeah, you can check out our courses as well. But realistically, I'm sharing an extra chart there every week. And I look forward to seeing you guys at the end of today. And I look forward to seeing you next week as well. Appreciate it. On your BTC thesis, what are you thinking of timelines? I'm just really looking at the next month, and then we'll reassess. Because obviously the end of the technical cycling theory is really abound now, traditionally. So we can probably reset at some point soon. But we need structure past 90.96 or 116.5. We'll reassess that. Thanks, brother. World class. Very much appreciate it. Thank you to all of you guys. If it wasn't for you supporting, I wouldn't be here doing it with you. So, yeah, massive thing. Bye for now.